Hey, it's me again. Trying something a bit different, having the headphones down here. And now my curly hair kind of sticks out a bit. So, of course, as you all know, this isn't financial advice. You're following along with me on my own thought process. You're essentially watching one bird's dream. Admittedly, I like to say that the Dr. Pepper theory that I had was pretty loose association. There were a few things that I saw being similar with this, and one was trying to make the dividend a non-taxable event. The second one was purchased by another company, being that company or companies who might purchase the Torchlight assets. There was multiple companies involved: Keurig, Dr. Pepper, Snapple. This one, there was sort of Metamaterials, Torchlight, and then the new buying company or companies. And I saw more similarities with this than Overstock. And while Overstock did issue a special dividend, there were no mergers prior to Overstock. There was one company. There weren't buying companies. You know, nothing was really being sold. So, you know, you can say that the Dr. Pepper case was loosely associated to best. But it did give me something to start with and go from there. It gave me a starting point to really formulate where to go. And one thing is the non-taxable event. So Torchlight's goal was to sell the Oro Grande Basin to the highest amount of currency of offer to the best offer. Yes, we don't want lowball offers. Many people have stated that. But it's not just a good amount of money. It's a good amount of non-taxable event money. And they haven't been able to sell it for, I'd say, 2 years at this point. They put it up for sale in 2019, mid-2019. And now it's the end of 2021. So just over a year and a half, it's been for sale. It wasn't that they couldn't find a buyer. And there might be buyers now. And it wasn't because that particular land didn't have oil. The oil was, confirmed. It was undeveloped land, but there was more oil there than any other land. For comparison, the Shell land had 1.4 to 1.8 billion barrels of oil on it. This has 2.3 to 5.1 billion barrels of oil on it. So a much bigger scope of potential cash flow for a company. So what was the problem? The problem was they were looking for top dollar in a transaction that didn't have to be taxed. So consider the people who had the most shares in the company. Brda, McCabe. When you have millions of shares, you don't want it to be taxed. You don't want to deal with the tax man. You saw George. I have to exercise shares. I have to deal with the tax man. Elon, you got to deal with this tax man. I talk about, you got to take out considerations for the tax man. And a big dividend with millions of shares equals a lot of dollars in taxes. So if you have the time and you have the patience, we're going to wait for an untaxable event. That could work for some of you who hold lots of shares. I know quite a few people who follow me who have more than 40,000 shares. Some have 100,000 plus shares, and one person has over 1 million shares. So an untaxable event might be advantageous for you. Let's talk about how that's going to work. First, let's listen to that sound clip I played from the previous YouTube video I did about John Brda talking about his ideal buyer.
And if you had a choice, I mean, you said you're open to either selling the asset, a joint venture, or selling the company outright. Which of those three would you prefer? Which would deliver the most value?
My preference is to sell the company outright for stock. Quite frankly, the types of people that we would be looking at are the Oro Grande would have a significant impact on their stock on a go-forward basis. And because myself and Greg McCabe and a lot of the larger holders of the stock really aren't interested in a taxable event, we'd like to go along with the new company. And so therefore a stock deal wouldn't create a tax situation for anyone. And if they wanted to sell at that point, they could. But those of us that want to hold and go longer, we can do that as well.
Okay, sounds good. Now,
Now, let's look at this presentation, the Torchlight presentation from December 2018. And on page 3 here, you can see it talks about the goals for the next year. One of them is to market the Oro Grande to an even larger established public energy petroleum company through a stock sale. This would create your non-taxable event. If you want more interest, I have links to the IRS page about non-taxable events. So if Greg McCabe has 12 million shares, and Uncle Smokey's count, it was about 12 million. He did a fantastic job, by the way, of going through who has shares and who doesn't. Like I said, if you all want to know who has what shares and what institutions have how many shares and, when shares don't count because they're doubled, you go see his video or ask him, talk to him, watch his videos. He is on the ball with that. So Greg McCabe has 12 million shares. Now, if you have 12 million shares and, my dividend calculation was going to be $30+. Multiply 12 million shares by $30+. It's $360 million. Now, think about that tax rate on $360 million. Well, how do you avoid that, tax man? You're going to create a non-taxable event. But because of this, because of the way John Brda stated it in the interview, it gave people, if you created a non-taxable event with shares in the purchasing company and it was publicly traded, you could easily sell your shares. You could hold or sell your shares. This would give you, hold, non-taxable event, hold for as much time and get the long-term tax rate, which at this point, by the time it's done, might be that for a lot of us. Or, you could cash out and get your capital gains. The choice is yours. What do you want to do? The choice is to the shareholder. Who holds the share has the choice. And because of this, I'm guessing now that we can eliminate private companies off of our list. So as much as I wanted to go to space and have Lone Star Mineral Development, that might not be the case. It still might be the case. You still might get something with Lone Star Mineral Development. There's multiple properties involved. There's 2 properties. It depends what gets divided and sold to who. One property could get divided. The Oro Grande could get divided up into 2 parcels and sold to 2 different companies. It depends. Looking at this evidence, it does give me... it does suggest that you're going to see more public companies than private companies. So I'm not sure at that point yet, but that certainly is a possibility. So looking at the Oro Grande, what this has to add for any purchaser. Well, according to Brda, again, he talks about cash flow. And this would add a lot of cash flow value to the publicly traded company. Let's think back to that ConocoPhillips Shell analysis that I did. The analysis is called How Long Will It Take? And I talk about the meeting that they had, the investors meeting after the asset was announced that they were buying it. And it was announced for how much? $9.5 billion. This was in September. If you listen, all the questions asked are by the Tier 1 analysts. 4 out of 5 Tier 1 analysts. Morgan Stanley, not Chase, sorry. JP Morgan was there. Morgan Stanley was there. Bank of America was there. And then like a top Tier 2 analyst was there. Wasn't Jeffries. It was somebody else. But they were there. They were all giving the allocates at the cash flow. They were like, yeah, cash flow. Shell, I'll bring it up here, said that we're going to get $4 billion of cash flow over the next couple of years to the company. And Brda restates that. That echoes with Brda's sentiment of the Oro Grande will provide a great cash flow to a company. Top tier analysts will do this. Like I said, this is drawing on my previous case studies, my previous experiences with what I know. So where do we go from here? My next step personally is to start asking questions. My first question is, what about the shares of Oilco? This is a big one. There certainly is a share discrepancy between Oilco shares and the outstanding MMTLP shares. Are those going to change or not? So according to George, there was 165 million or just under 165 million outstanding MMTLP shares. Those were the outstanding preferred shares. Oilco has 250 million regular shares and 25 million preferred shares. I'm not sure, because the assets are going to get spun out into Oilco, I'm not sure how that's going to convert. That's a big uncertainty point, and I'm not sure what's going to happen. Can these numbers change? I was under the assumption that they could change, but what if this is like some weird plan again? This is a part that I'm very concerned with. Of course, if you email investor relations, you're going to get a canned response with the preferred share. Okay. I know they can't really say anything, but that's not giving many people assurance. So that's my big question right there. And that's where we're hanging off on a cliff. Are those shares going to change or not? How are those going to be reflected with MMTLP shares? The next one, there are multiple parties involved with buyers. Okay, so it's a given that there's going to be multiple parties on the seller's behalf. We have different parties that had different working interest percentages. We have different parties that had different royalty percentage purposes. That was sure revenue interest. Are we going to see multiple people buying? Because there are different properties. There's two properties, distinct properties. Is the Oro Grande going to be divvied up? Is, one company going to buy this, one company is going to buy that? Or is it going to be that all package deal? My next step is, after asking these questions, I'm going to look into various larger oil companies. And I'm going to see if they have, they've been issuing new shares. Or is there a share buyback? Both of those might indicate that they're getting ready to acquire and move forward with the Torchlight acquisitions. Will this be in a private company? A private company does issue a tax-free event, but you can't really cash out. And Brda said, he wanted to give people the option to cash out of it, or you can hold and, remain tax-free. There are some drawbacks to this. So I'm going to cite this paper. There's this paper. I talked about the Dr. Pepper Keurig Northwestern legal study, and I'll have a link to that. But there's this Harvard Business Review, and that's a really good one. It goes over case studies, stock or cash, the trade-offs for buyers and sellers in mergers and acquisitions. So it gives people a rundown of cash dividend with companies like this, or do you get in the new purchasing, the new buying company stock? What are the trade-offs? What's the risk? How did that amount? It's a very interesting read. According to the study, if you're going to get stock in a new company, the buying company has to issue stock. Acquiring companies, I'll quote it, acquiring companies must be able to explain their stockholders why they have to share their synergy gains of the transaction with the stockholders of the acquired company. For their part, acquired company shareholders who are being offered stock in the combined company must be able to understand the risks of what it is. In reality, it's a new investment, and this makes the job of the board members more complex. Like I said, it's a complex process. We'll first look at the issues faced by the board. So, yeah, it talks about all the questions and you should ask. And they talk about economic questions. This is definitely up Allie's area of expertise. Are the assets being fairly valued, undervalued, overvalued? We need to find out the value for the assets, but my value for the assets, guys, that I've calculated. Second, what's the risk involved? And then we're gonna face value, a fixed value, a fixed share offer. And then it talks about the values of the shares. It's, like I said, a very interesting read through. So have at it. And a non-taxable event would fall under the IRS. If you also want to look into this, because I've had like 2 questions about this today, it would fall under IRS 355, Section C2A. 355, Section C2A. I'll have a link on federalregister.gov about this. About adjustment-based gains recognize distributions as the property were sold to distributee at a fair market value. So this talks about the stock in a non-taxable event. And very complex process. And I'm trying to like make it as simple to follow as possible. So what happens if we do get a sellable stock in a big oil company like Conoco, Exxon, Marathon? Well, first we have to do a conversion rate. And the conversion rate's going to be whatever the special dividend's going to be, and then whatever the trading price of that stock is. So, for example, you know, you have like, if we value our dividend at $30, right? And at that price, you get 2 Marathon shares for every 1 MMTLP you had. Or maybe you get 1 ConocoPhillips share for every 1 ConocoPhillips for every 2.3, I think that's 2.3 MMTLP shares you had. At this point, I guess it'd become Oilco. But this is in if we can figure out this first step of the shares of Oilco versus the shares of Torchlight. That's the first step. I'm not going to mention the Winkler project because Winkler was, you know, sold to Mego 4 in 2019. I'm not sure about how much. I'm still looking for that data. But then if there's multiple companies involved, maybe Marathon wants this property, ConocoPhillips wants this, or Exxon wants that. Maybe Diamondback's one of them. Maybe Diamondback wants something. So if there's multiple with multiple stocks, that could get wild. Would you get like a little ETF or something? I don't know. But remember, guys, this is just my thought process, and I know some people, if they were offered stock that you could sell in Conoco or Exxon or Marathon, they'd be pretty happy with that. And then you could sell or hold. Of course, you know, these companies have to be willing to anticipate a price drop from people selling. You have a whole bunch of disgruntled investors who want their cash, and they've been pretty beaten and bludgeoned. So the sentiment here is that they're gonna sell as soon as they're able to. So I'm still, my numbers haven't changed for the valuation of the special dividend. And for me, the math is there, and the math offers a more objective viewpoint, free from emotion. It's numbers on a page, it's calculated, it's proved, if back tested it, it just offers me an objective viewpoint, free of emotion. Let's talk about that dividend price again. So there's options that expire in January, the MMATA or whatever. There's those options, right? They have metamaterials with options tied to them. If they expire in January, which is Q1, that gives us a few things. Because if you start to do this transaction, guys, and you got those options hanging around, all of a sudden, for the price of metamaterials, which they shouldn't be related at all, they should be bifurcated, but they're related. They're 2 different companies at this point. The only thing that makes them similar are those options. That's why people are saying the option part, because the only thing that makes this 2 separate companies, as John Brda stated in his tweet, the assets are bifurcated. And whatever happens with former Torchlight MMTLP should not affect Meta. Because those options are there, that's what's muddling these things up. So if, let's say, the dividend goes through and you get shares in Conoco, for example. Now all of a sudden you can get shares in ConocoPhillips for the price of MMTLP. Well, heck, that's a pretty good deal to me. And it should not affect MMAT at all, the price. Because of that, I think that's why they're waiting until January. And that's why you hear this talk about options, and it's about the options. Again, that's why. The options weren't supposed to be, MMTLP was not supposed to be tradable. But it inherently at first was tradable because the options had that special dividend tied to them. And if they're not tradable, but yet they're tradable with options, then, that's a false case. Then they are tradable. It's yes or no, right? It should be tradable, but only through options. Well, then that still makes them a way to be tradable. So I'm trying to think in a form of a logic circuit here, in a very yes, no, if then logic circuit path. I can switch my brain. And that sounds weird. I know. It's like I can switch my brain. I can think in logic circuit mode, or I can be like the super empathic, softy, person. Like I told people on my live stream, I cry watching the movie Forrest Gump. I love that movie. I always cry. I'm going to cry now thinking about it. But, okay. Let's get back to yes or no logic circuit brain. So you were waiting for the options to expire or go away because you don't want to buy Exxon or Marathon for like the price of MMAT. Waiting for these options to go away results in a lot less mess. And you know how the mess has been with the merger, right? And MMTLP shouldn't have been trading, but it was with the options to begin with. And then it just became trading. Now, is that how the Meta says that they didn't have anything to do with it? We're waiting, of course, with the statement because somebody had to sign something. But was it because there was options trading at that time with MMTLP and that was enough of a go light? I'm not sure. You tell me. If you have more experience with this, you tell me. And it's been a mess. The merger has been a mess. That was a terrible summer. It was we'll never forget it. And that's starting to sound like a Bryan Adams song. It was a terrible summer. So we're waiting, the options expire in January. That could very well play a part. That could be another trail of breadcrumbs. And we could be waiting for this whole sale and everything to take place. I still have also questions about the permanent staff hiring. That's really interesting language, the permanent staff, and that's language that people want to say with Oilco unless the permanent staff has already been hired on for the new company, if that makes sense, or for the buying companies. We'll see. We shall see about that. And, some people are fine with the spin out, Oilco being its own separate company and making oil. A lot of people are hoping to get that liquid dividend, be it cash or stock that you can easily sell for cash. As Brda stated, that stock, you get stock in the company that will give you that option. You have the exit option to sell for cash or hold. Again, I'm hoping for more breadcrumbs. And we'll see as time goes on. Okay, guys, that's my DD for today. Lots of questions asked, some breadcrumbs to start going, looking for trails to find. I will talk to you soon. Goodbye.